Well, yeah, thanks for coming, guys. Like I said, we're going to get started. We have our technical support incoming with our correct chords. But just to kind of get started, want to say thanks for coming. My name is Jeremy Lieber. I am a day trader, and I invest in the stock market, both short-term, long-term. See a few familiar faces, few that I have not met yet. So I appreciate you guys coming out. Today, the goal is to help you guys get an understanding of how to invest in the stock market with stock options, both on a short-term and long-term basis. I feel like the stock market has a lot of generalizations and a lot of misconceptions. And so we're going to address some of those things. We're going to actually give you practical strategies to use. We're going to address a few common mistakes that people are making in the stock market on a consistent basis. We'll have some pictures and things to show here once food gets here. We just got word that food is looking more like 12 o'clock, so we'll get going. Once food gets here, we'll have you grab lunch and then sit back down, and we'll kind of proceed at that point. So we'll just have our, I guess, 30-minute intermission. But I guess to start, so a little bit about my background. A lot of you in here are in sales, whether that's door-to-door or other sales avenues. Some of you aren't, but I started in door-to-door sales. Did it for 7 years before transitioning into doing this full-time. I started in pest control, so my very first summer was selling in Columbus, Ohio. Way back in the day, selling pest control. I thought it was pretty oversaturated and crowded then, and I'm sure now it's a million times more. For those of you who know door-to-door sales, it's a grind, right? Like you're working very long hours. Who here does or has done door-to-door sales before? Okay, cool. Yeah, so very funny in the early days of the Green X era. Ran teams, the whole deal. Then became, what's up guys, the VP of sales for Proof Pest Control, which is, I don't know if you call them a small company, smaller. When we were there, we were doing, I think it was 8 to 9 million in revenue now a year. Very focused on quality production. The company was trying to sell or building to sell. Now it's funny, there's teams that are doing 8 to 9 million pretty consistently. So my time in door-to-door was awesome. I feel like it's a very good skill to have. But day trading is the same, or investing in the stock market is the same, right? Anything that you are using your knowledge to increase your wealth is a skill, right? And I think that's a big misconception, number one, about the stock market is that it's a skill, right? If you look at the wealthiest people in the world, right? Yes, they have big real estate portfolios. Yes, they invest in other businesses. But what's the majority of their wealth in? Stock market, right? Warren Buffett, Elon Musk, Jeff Bezos, right? It's like the majority of their wealth comes from the stock market. For whatever reason, people have a negative connotation with the stock market. I've been to conferences, I've been to gatherings where influential people will get up and tell you, don't invest in the stock market, don't day trade, don't use stock options, which is always so strange to me because, again, they're basically saying, hey, don't do what some of, again, the wealthiest people in the world are doing. But I think there's just a lot of misinformation and, quite frankly, just lack of knowledge that goes into investing in the stock market. So I'm assuming a lot of you have probably at one point or another had a Robinhood account, tried to put money into the market in one realm or another, whether that's options trading, whether that's just buying stocks, and that's most people, right? And if you look at the statistics, it's less than 10% succeed successfully from short-term investing in the stock market. It's a very similar number to the amount of people who start a business who succeed, right? The numbers are almost comparable. Yet one is viewed as, hey, you're starting a business, congratulations, super happy for you, like go get them, you're gonna do it. And then if you start trying to invest in the stock market, it's like, oh, you're gonna fail, no one can ever succeed. Again, just there's weird connotations around it, and I'm not really sure why. I think social media has a big thing to do with it, where a lot of people in the social media space have created a false sense of what the market is. I am friends with a lot of successful investors in the stock market who either day trade or invest long term. Most of them aren't driving super fancy cars. Most of them aren't living in, ridiculous penthouses in Miami and, having the signs at the club that come out, whatever, with all the champagne bottles. Like, they're just normal people who don't have to work, right? They're normal people who enjoy spending time with the people they want to and focusing on, living a life that is built around the things that they want to do on a hobby basis, but also the people they want to spend their time with. So I don't know about you guys. For me personally, that was a huge reason as I was getting into the market of wanting to learn how to do it successfully, is that I didn't really enjoy the fact that I had to rely on other people for my success. I really had a hard time with school generally. I know a lot of you probably have more education than I do in here. I had 1 semester of college under my belt. I was playing football at the time, and I had to have a 2.0 GPA to be on the team, and I had a 2.1 GPA the only semester I went, and I cheated on all the tests to get that 2.1. Obviously, I was not very good at cheating either because I only had a 2.1. But school was very difficult for me, and just traditional work was never a desire for me either. So all of you who are in sales, you're on the path, because I think sales in general brings a lot of freedom, right? Kind of freedom of schedule, a little bit more time to do the things that you want to do. If you're doing door-to-door sales, it gives you even like blocks of time, where you can have 8-9 months of freedom. But overall, you still have to work for someone, right? You're still reliant on people's decisions, whether they purchase your product or not, and a lot of factors go into that as well. Other common misconceptions I would say about investing in the stock market is it's gambling. No one here gambles, right? No sports betting, no Vegas goers, right? I certainly am not. No, I'm just kidding. I love to gamble. I'm a huge gambler by nature, and that's a huge draw to investing in the stock market initially. But as you can see, this is from March of this year. Had a third-party software basically verify my trades and verify my investing during that time to kind of just show, the reality of what can be done. I didn't have a losing day in that month. My profits were $32,000 in the market, and I had a total win rate of 92%. So I had 26 winning trades and 2 losing trades. If you had that type of a heater in a casino, you'd probably be banned for life, right? Like you're not going to have that type of results gambling. So there's got to be something there, right? If you have a 90% win rate, there's got to be some validity to what you're doing, which again comes down to a number of factors. Another misconception is that you can't beat the market consistently, which again is such a, to me, ignorant statement, because there are people who are making millions and millions of dollars in the market that we all see on the news and TV every day, and even people that you probably associate with on a regular basis who are consistently beating the market. And another, big question mark or reason why people don't get into the market is the idea that you have to have a ton of money to invest, right? So if most of you are in the sales world, investing is a pretty big focus, right? You make these commission checks, you make money. How should you spend? How should you not spend? And almost everyone is told to invest. And what are some of, the big things that you're told to invest in? Just shout them out. Real estate's number one, right? Every sales organization tells you to get into real estate. What else are you told to invest in? Not a whole lot else, right? Like most people, it's real estate. A lot of people talk about like mutual funds, index funds, Roth IRAs, things of that nature, which are kind of that slow and steady growth. There's other kind of fads of investing that pop up. You have the Amazon stores. I know more people who have gotten scammed out of tens of thousands of dollars from Amazon stores than people who actually make money. Like I personally, I don't know anyone. Well, that's not true. I know a few people, but like in my close proximity, I don't know anyone who's running a successful Amazon store. If you are, come talk to me, because that's sweet. If you are, congratulations. Crypto, obviously, big crypto boom, NFT world. There's a few people in here who I know have been involved in cryptocurrencies and have done well, and a lot who haven't, We then have other forms of investing like businesses, right? Trying to invest in startup businesses. There's just a lot of different ideas and ways to invest out there. But what they never teach you and talk about is with real estate, if you're a 1099 employee, right, you're going to have a very hard time getting approved for a loan. Super tough, right? Especially if you are like most sales reps who write off everything plus some so that you don't have to pay taxes, right? You go to buy a loan and they're like, on paper, it looks like you're making $18,000 a year, right? Like, you're not going to get approved for anything. So investing in general can be difficult as a sales individual, and I think the idea that you have to have all this money to invest in general is incorrect. As an investor in the stock market, I personally started with an amount that was nothing crazy, and now teach people that, you know, we don't want you investing more than $2,000 when you get started, right? So most people who get started with our programs of investing are anywhere between a $500 and $2,000 amount, which most people can afford, right, and learn how to invest with. So I think that the barrier of entry in the market is so much less, which is cool, but if you don't know what you're doing, the risk is so much greater. Right? We've all heard stories and all probably know people. Some of you may have been those people that have failed pretty horrifically in the market in one phase or another, right? Gotten burned, lost money, whatever the case is. Another huge misconception about the stock market is that it's difficult to learn. The whole point and the whole kind of ploy on uncommon education is that it is uncommon, and I'm not sure why, right? But like, even if you go to school and you try to learn about the stock market, you are not going to be taught strategies and ways to invest in the market, whether short-term or long-term, right? And I wonder why that is, and I try to grasp why that is. And to me, I think a lot of it comes down to schools are designed to create really good employees, really good people to kind of climb through the corporate ladder. If everyone became the 10% of people who can successfully trade the markets, there'd be no jobs, right? There'd be no workforce, right? Because everyone would just be working from home, trading the market, doing what they want to do on a day-to-day basis. So with all that being said, obviously if you're here, you have interest in investing in the stock market, whether short-term or long-term. So I want to talk about today stock options specifically, and how both long-term and short-term, I believe it is the best way to invest your money. And it's really not even close, in my opinion, right? So let's talk about right now, and again, we'll have some stuff to show once we have our food arrive and everything. So this is me. Look at this little guppy. This is my very first door I ever knocked in Columbus, Ohio. I look a little different. This dude is like Mr. Rogers in the flesh, like just so mild-mannered. Didn't even get close to selling it, but that was my very first door. I'm glad I have that picture. Now, what I wanted to show is all you guys who ride Segways thinking like the little 9-bot's great, this is literally what I was mobbing around in. I was like knocking over flower pots. I was breaking the lights going up the sidewalk. It was bad. It was a lot of fun. I've always had like back issues, so I felt like it was a good thing to use, and it was a lot of fun. Ended up selling it on eBay after this summer. But yeah, this was in Columbus, Ohio. And so again, like right where a lot of you guys have been, wanted to share that, pretty funny. This was in Louisville, Kentucky, managing teams, just overall sales world. And this was me at Proof Pest Control in the VP of Sales role. I did want to also touch on, it's funny, the summers I spent in door-to-door are just the worst. They're not the worst, but they're kind of the worst, right? Like you tell yourself that they're fun, you tell yourself that they're awesome, but like, let's be real, like you're sacrificing time away from friends, family, you're grinding for 9 hours a day. It's not fun. Like, it's just not. I don't care how many barbecues you have on the weekend, like it's not fun. It's not a good time. So now I get to do things I want to do. This is me fly fishing in Colombia. I'm catching a 20-pound peacock bass, which is sick. I was golfing in Punta Mita not long ago with Jackson, who a lot of you know who's here. I'm going to Argentina in November, fly fishing for golden dorado. My time is now spent doing actual fun things, which I think is cool. And again, going into a little bit more about the freedom of with family. This is my smoking hot wife, 2 kids, and we were out in Truckee, California all summer. Just decided to go out there and joined a country club up there, played golf, had a boat up there, fly fish. I mean, it was just awesome. We missed the first 2 weeks of our daughter's kindergarten, and we didn't tell her because we didn't want to go home, so she started a little late. We're like, she's 5. She's not gonna know. Like, what are we talking about? It's whatever. She might know. I don't know. She's pretty fine. But yeah, and then here's a little more detailed breakdown as we were referring to the month that we recorded here. And you can see it's pretty funny. You know, some days on this $32,000 month, $580, right? Other days had bigger days where, you know, made $5,000. Other days make, you know, $1,400. And the other crazy thing is I didn't trade every day during that month. There's 5 trading days or investing days in the market each month, and you can see 1 week I only traded 1 day. I think I was on a trip here. This week I know I was on another trip. You know, this week I only traded 3 days. So it doesn't take a lot to see a lot of success in the market once you understand how it works. So now going into, I guess, stock options versus stock equity. And again, just wanted to kind of cover those as we had anticipation to do those. If you look at the stock price of any type of stock chart, if you pull up a Robinhood account, or if you are looking in any type of investing brokerage, a lot of you will see candlestick patterns like this, or you'll see, you know, lines showing whether the stock is green or red, or if it's going up or going down. And if you purchase a stock, okay, so let's say you purchase a share in a company. Let's use Apple as an example here, right? You can see at the start of the day, the cost of 1 Apple share was $225, okay? So if you wanted to invest in Apple, right, and you wanted to buy 1 share of Apple, here's a big difference between stock options and equity. To purchase 1 share of Apple, it would cost you $225, right? Pretty simple. And you can hold on to that share forever, right? You can hold on to it until that goes up to $1 million, or you can hold on to it until Apple goes bankrupt, which, you know, arguably there's no way Apple will ever go bankrupt at this point. But in this example, this was from this morning, okay, this is pretty cool this morning. We started at $225, and within an hour, we jumped up all the way to $230, okay? So if you owned 1 share of Apple, okay, and it cost you $225, you would make a whopping $5, right? Nothing to write home about, but maybe, you know, a little McDonald's something. It's probably not even a McDonald's meal now, the way that everything is. I feel like the days of the spicy, I ordered a spicy chicken sandwich the other day. It was like $4, those dollar spicy chickens. Anyway, $5, right? Now, stock options, if you purchased a stock option, right, at the same point in that hour, it increased, the contracts that we traded this morning, they increased 115%, okay? So what's 115% of $225? 240, something like that, 250. So the exact same movement in the market, right? If you buy a share, you're making $5, and if you have an option contract, you're making $250, right? So the opportunity with stock options from a short-term investing standpoint, you can make so much more with small movements, okay? And that's how we invest from a short-term perspective. We'll talk about long-term investing here in a little bit. Now, equally, okay, if you bought at $225, let's say it dropped to $200, right? You would only lose $5. But if you had a stock option contract, right, you can lose 100% of your option contract. So obviously a much greater reward potential, but also a much greater risk. Something else to note, if you are learning about stock options, you can only lose what you put into a trade, right? So if I put $100 into a trade or into a position while trading stock options, I can only lose $100. I can't lose more than that, okay? There's, you know, in that regard, there is limited downside risk. But in the opposing direction, that could increase to 10,000%, right? And there's an infinite upside. So that's number one, is that if you are using stock equity or purchasing a stock versus stock options, the movement is drastically different. And that's a huge thing to understand when you're learning to invest both short-term and long-term, okay? The second important thing to note, difference-wise between stock options and what I'm gonna need to do here is I'm gonna have to pull up my notes on my other device here because I wasn't planning on having to AirPlay. We'll pull this up in a second. But the second piece is as far as difference-wise, there is a limited time that you can hold on to an option contract, okay? So if you buy Apple stock for $225, you can hold on to that for as long as you want, right? No limit to how long you can hold on to it. With option contracts, you can only hold on to it for a certain amount of time. And each contract that you can purchase has an expiration date, what it's called, and they expire in weekly increments, okay? So if you had a desire, as an example, try to make it a little more simpler, let's say that you were looking at Apple and you said, I believe in the next 2 weeks, Apple stock is going to increase, okay? You could purchase an option contract with an expiration date 2 weeks from now, which means you can hold on to that contract for 2 full weeks, okay? Let's say you were one of the people who believed in NVIDIA, the stock NVIDIA years ago, in 2022, right? You could say, hey, I believe over the next 2 years, NVIDIA is going to increase in price, and you can purchase option contracts with an expiration date 2 years from now, okay? And you can hold on to that contract for up to 2 years. So this is again, very important thing to understand and realize, because most people who invest in the market, or when you think of traditional investing, you put money in, you just kind of let it do its thing, right? You don't look at it, you don't touch it. Trading with stock options or investing with stock options long term, it's a much more active form of investing, okay? Where you are actually making decisions and implementing positions in the market based on what you think is going to happen on a time frame perspective, right? This is where you can start to understand and gather, right? Like, okay, that might be helpful to know in certain scenarios. We're going to go over those here in just a second, how you can utilize that on a short-term and long-term basis, okay? The last thing that the difference is between stock options versus stock equity is that they move not just in relation to price, but also in relation to the overall interest in the stocks, okay? So going back to that example of Apple, let's say that it moves that $5, but there's no big like news around it. It just kind of rises because the direction of the overall market's going up. It will not have the same increase as if they just announced that they're making, Apple skyscraper, or they're going to make an Apple healthcare or something that's like really good news for the company. Then the interest and the volume that comes in from investors will actually move the option contract that you purchase more than if there was no interest or low volume. So that's something else to consider, right? Because again, if you own a share of Apple, $225 to $230, every single time that happens, you're going to make $5. But if you're investing with stock options, that $5 move could be a 115% move like we saw today. If there was really low volume on that move, it might only increase 80%, 70%. And if there's a ton of volume, that could be a 400% move, right? So there are factors that go into the movement in stock options versus stock equity or owning shares in a company, okay? So at least from a general understanding, there is a big difference, right, between owning shares in a company and stock options. How many of you knew these things before coming here? Maybe about half, so kind of, right? And this is a perfect example of something that's so simple and can benefit you so greatly from an investor's perspective that just isn't taught or isn't discussed in traditional forms of education. So the question then becomes, okay, there's this huge potential upside. There's some pretty great risk and potential downside if I don't know what I'm doing. So what's the benefit, or what's the pros and kind of the cons between the two, right? And again, this is all leading up to talking about how we can actually identify these setups, and we're going to show you guys how to invest using options, which is really, really cool. Next, okay, is from a benefit perspective, okay, is that you are in control from an option perspective. You're in control of the implementation of the strategy, and typically when you invest with options, you have a game plan, right? Because if someone tells you, hey, you should invest in the stock market, I remember the first time someone told me that, I invested money into Nike, bought shares in Nike because I like their shoes, right? That's not a strategy, right? That's not a game plan. That's not a way to be profitable. right? I mean, it's a good way to just kind of get exposed to it, I guess, but that's not a legitimate strategy in the market. So you are in control, meaning typically when you invest with options, you have some idea, whether from a technical analysis standpoint, which we'll talk about here in a second, or from a fundamental analysis standpoint, right? Like you believe something's going on with the company, so that means you are going in with a game plan. Okay, so that's one big difference between the two. Next, benefit-wise, it's a very cash-forward investing strategy. How many of you have put money into an investment that you have not seen a profit from, or you have not been able to pull money from for a month? Okay, so you put money away, and a month goes by, and you have not seen the cash in your account or actual cash, right? Most people, that's most forms of investing, right? Most forms of investing, it's like, cool, I'm investing money into this thing, and I don't know when I'm going to see it again. I also think this is a huge reason why people don't like investing in the stock market, right? Because most people, when they hear that, they're like, well, I don't want to put money in the market, even if I know it's going to be good for me down the road, because I want the money now, right? Investing with stock options, right? Again, we have expiration dates to our plays that we're making. We have the ability to pull money out quickly, right? As a day trader, what I do, I literally pull profits every single day, right? So on that, right here, when I make, $2,200 on March 20th, March 21st, that $2,200 is in my bank account, right? So it's a very cash-forward form of investing using stock options, which is pretty cool. So hopefully you guys are starting to see that stock options are pretty cool. So all those people who are telling you stock options are a not safe way to invest or it's not a good way to invest, they obviously don't know how to use stock options, right? That's what I always say. It's like, bad comparison. I was going to say something else, but I won't say that. Maybe I will. We'll see. I was going to say, okay, I'll say it. I've had chronic back pain for my whole life, so I have my medical marijuana card, and I always say anyone who doesn't like marijuana has never tried marijuana. That's the comparison that I say. So sorry for anyone who doesn't like it or not for it, but for me, it's like life-changing. I slept on a hardwood floor for 8 months of my life after a bad car crash. First time I was able to have medical marijuana, first night I was able to sleep in a bed. So literally miracle. Okay, next, as far as the benefits between the two, okay, is that you can make money in both directions. Okay, this is probably the greatest, benefit, in my opinion, to investing through stock options, is the fact that you can make money as stocks decrease in value. Okay, which is absolutely insane. So let's pull this up here. So this is pretty cool. So this morning, okay, again, Uncommon Education, we teach people how to trade. I send out setups to our members of potential ways to identify, right, which direction stock's going. And this morning, okay, this is from this morning, we were looking for a rejection of a zone on NVIDIA stock, meaning we had an idea that if the stock price on NVIDIA rose up to a certain level, that sellers were going to come in and push the stock price down, okay? So in the market, you've probably heard the term short selling the market or shorting a stock, right? The movie The Big Short, incredible movie. If you haven't seen it, it's fantastic. There's a way to, again, increase your position in the market as a stock decreases in value. You're essentially betting against the stock, right? And so sure enough, this morning, this play played out perfectly. The stock rose up into this area. It rejected just like we thought. And I'll kind of show you, this is funny, the play-by-play of how it happened this morning. I sent out an alert and said, cool, we have a high-risk setup to enter puts. That's the contracts that you buy if you believe the stock is going down. And I alerted where the entry price was going to be. It then went from there to an exit of 1.7, which is a 30% move in, I think it was 8 minutes, okay? So in 8 minutes, us and the people at Uncommon Education or whoever else decided to do this that were watching the charts today, they saw a 30% increase on the money they invested in 8 minutes, okay? So let's rewind a little bit here. If you're looking from a perspective of investing, okay? 30% return. Let's just talk about 30%. 30% is would be an absolutely astonishing year, right? From like a traditional form of investing. 30% is like, people probably wouldn't believe you if you told them you got 30% in a year. What's so difficult about options trading and options investing is that, yeah, you can see that amount in a day, right? You can see that amount in a matter of minutes. And so this was cool. It happened exactly how we wanted it to, and that was by the stock decreasing in value. Okay, so again, anyone who owns NVIDIA shares, okay, you own shares in a company, if it goes from, let's say, $230 down to $220, you lose $10, right? And if you have lots of shares, you're losing more. But if you're investing through options, there are people who are making money as your stock portfolio is decreasing in value. It's kind of crazy, right? Understanding that that is an actual thing. So now let's give a few like real life examples, okay? So let's just say you know nothing else. We end it today, we end the conversation today, and you now know that you can either increase your positions if you are in, if the stock goes up, you can make money with option contracts, but you can also make money as option contracts decrease. Really good example that I wanted to share that's really funny. Okay, this stock right here, this is the stock price on a stock that we're going to discuss over 3 years, okay? This is a 3-year time. This is Peloton, okay? Peloton bikes. COVID, right? COVID is such a funny example in the stock market because it really illustrates how if you knew what you were doing, you could have made out like a bandit, which I did. I made a lot of money as stocks came tumbling down during COVID and afterwards. So Peloton, during COVID, right? As soon as COVID happened, lockdowns came about. Do we think that Peloton stock went up or down? Up, right? Because everyone can't go to the gym anymore. Everyone wants to work out from home, whatever. So it peaked and it rose all the way up, right? During COVID. And then some bad marketing campaigns, some different weird stuff going on. And then more importantly, lockdowns stopped, right? People could go back to work, back to gyms. What's the logical response if you are even semi-aware of stock market investing? Do you believe at that point that Peloton stock is going to continue going up or drop? It's going to drop, right? Obviously. It's the same with Zoom. Zoom during COVID, right? Skyrocket because everyone's on Zoom meetings, right? Moderna and Pfizer, right? What are they called? I'm thinking injection. That's not right. Vaccine. And, I mean, it's not much. Injection vaccine, same thing. But yeah, the vaccines, right? COVID, they were skyrocketing. Like they were some of the highest valued stocks in the world at the time, right? And then as soon as it's like, yeah, we no longer need vaccines, you don't need masks, whatever. They came tumbling down. So you as just, let's say an everyday person, right? You say, okay, let's think about this for a second, right? No more, reason for vaccines. Peloton, I don't think it's going to go whatever. I want to make money as that stock starts decreasing in value, right? And you can see that if you just had that simple understanding, right, how much you could have benefited from a long-term or short-term play in the market by entering option contracts that equate to you making money as a stock decreases in value, right? Now let's say, again, using NVIDIA as an example, NVIDIA, huge AI-driven stock, a lot of like monumental things going on. This dates back to 2022, right? So in 2022, let's say you kind of start hearing the buzzword AI, artificial intelligence, seeing these things, and you think, you know what? This company, I like what they're doing. I'm going to enter some positions with stock options because I believe it's going to go up, right? Well, again, in that time, it went from $35, peaked up at 140, okay? So if a $5 move is 115% increase, right? You guys do the math, right? It's astronomical, right? The type of money you can make. So I love being able to teach people about stock options just in general because even if you don't day trade, you don't do it on a day-to-day basis, just understanding how stock options work, you can create literal generational wealth just by understanding that you can make more than investing, buying shares at $40 and selling when they get to $130. Yeah, buy shares, that's great, but using stock options, you can make 100x, 1,000x, 10,000x, right? What you would make just by investing through traditional stocks, okay? So again, as you guys can hopefully see, there's a lot of benefit to investing through stock options. Now, I believe the food is here. Is that, is that true? 10 minutes out. Okay, perfect. We'll keep going. By the way, we're going to have an opportunity to ask questions at the end on all of this, so please write stuff down if you want. Next, okay, is that one of the beautiful things about investing in the market. How many of you have been affected with real estate investments because of how crazy things have changed, right, from interest rates to home prices, right? I know I did, right? How many people were burned, yeah, from, again, Amazon stores, a perfect example, or cryptocurrency investments because of market, right? How many people have money still in FTX that they're waiting to get their lawsuits, whatever, replenished back? I have a friend who had like $100,000 in FTX and he's gotten like $12,000 back, and they're like, we're still trying to recover the funds. It's just like, man, what a nightmare. But that's what's crazy about the market, okay? As long as the stock market exists, this form of investment, you can be successful at. And you now know it doesn't matter if the stock market is going up or going down. And that's what's so funny is I was trading during all these years, and people knew, like, as things were tumbling down, right, like, ooh, man, like, tough time to be a day trader, right, or tough time to be investing. And I'm just sitting there thinking, like, dude, like, you have no idea, like, I just made more money than I've ever made in my life shorting the shit out of every stock that I see because I just know everything's going down, right? So it really is a foolproof investment strategy, right? Because if you bought a real estate property, let's say even 4 years ago, right? Interest rate at 2.5%, prices were pretty low value. You think, okay, well, my mortgage is going to be less than what I could rent it for. So I could turn an awesome profit. Now, you literally are better off on paper renting than buying. Because the same house, your mortgage, after a 10%, 15%, 20% down payment, your mortgage will be higher than if you were renting the house, right? So all these people who are investing through real estate, they're upside down, right? They are, and that you have no control over. And to me, when I'm investing, I want to be in control. And that's why, again, a huge reason I believe options investing is such a effective form of investing, because you're in control throughout the whole process. Okay, let's dive into one more quick thing, and then we'll get food, and then we'll get back at it. So, what is the difference between short-term investing with options and long-term, and how can you implement that, right? I believe in the way that I invest in the market has nothing to do with the things that we were just discussing regarding like a gut feeling or thinking, hey, I believe this is going to happen, right? I use those things as a catalyst or as a way to say, hey, I believe Peloton's going to drop, but I have a strategy and a game plan of knowing when to enter, right? Because all the stock market is timing, right? It's, are you getting in at the right time? Are you getting out at the right time? So how do you know? Right? And that's a legitimate question to you guys. Like how do you know when to get in and when to get out of a position? Whether on a short-term basis, like we showed today, where in 1 hour time we saw 115% return, and in an 8-minute time we saw a 30% return, or you're investing over a long period of time. Like how do you know, right? And the way that the market works from a technical analysis standpoint means there are certain things that occur in the market, meaning people coming in to purchase shares or options, market conditions like just barely, I don't know if you saw, there's rate cuts for the first time in a couple years, however many years, which means the market responded positively, right? There's things like that you can know what's going on, but you still have to be able to understand risk mitigation, okay? And so this is what I want to talk about before we get to our lunch break, and then we come back and can kind of show you some things here from a strategic perspective. Anyone can hop into Robinhood, anyone can open up their mobile app, and they can say, I believe Apple's going to go up. And they can purchase stock options, and they can make a ton of money, right? Anyone has that capability. Essentially, it's a coin flip. There's a 50-50 chance that if you purchase calls or puts, meaning you believe it's going to go up for calls, it's going to go down for puts, there's a 50-50 chance you're going to be right. But how do you mitigate risk in that scenario, or how do you identify that? The principle of a reward to risk ratio is one of the most key components in investing. So before we even get into strategies, again, if you know nothing else other than you can make money on both sides of the coin, if you understand this principle that we're about to go over, you can be an effective investor with stock options, okay? So an effective reward to risk ratio means that if I have a $100 bill, okay, put it in the stock market, and I say, flip a coin, heads, I'm entering calls, tails, I'm entering puts, okay? And let's say it lands on heads. So I'm gonna enter into a position, meaning I believe the stock is going to go up. Well, if I enter with that $100, okay, as long as my potential reward is greater than the risk, you will be profitable. And let me explain. So let's say in that example today, on NVIDIA, right, our target profit was 30%, okay? That means that as long as the contract that we purchase increases by 30%, that's where we're going to exit. Now, we teach, and general, people who are good in the stock market will teach you want at very least, bare minimum, a 2-to-1 reward to risk ratio. Okay, that means that if your reward is 30% on a trade, the max you want to lose on that same setup should be half that, right? Which would be 15%. Okay. So again, I'm going to point out some numbers, right? You can see here, 92% win rate. This is not all the time, but I'm never below 80%, right? I'm usually between 80 and 95%. I've gone very long stretches of time with 100% win rates, right? With these strategies that we use. But even if you're only right 50% of the time, which is not good, right? If you're right 50% of the time, that means you're not really good at seeing the setups, you're not really good at seeing the strategies, whatever the case is. Even with a 50% win rate, okay? You win $30 with that same 100 and you lose 15, okay? What's your net profit? 15, right? Same thing happens again. You're right and then you're wrong. You win 30 and then you lose 15. You are super profitable if you are only right 50% of the time and you follow those parameters, right? And this is an important just like life investment strategy, is that you always want the potential reward to outweigh the potential risk, right? If it's not, it's a bad deal, right? Bad deal. We don't like bad deals. So if you're investing in a position and you say, okay, I believe that NVIDIA is going to hit this rejection area and decrease in price, so I'm going to enter a contract, right, a put contract where I believe the stock is going to decrease in price. Well, if you enter, and let's say, yeah, you're wanting to take profit at 20%, then you need to exit the trade if you lose 10%, right? It's just like, this is investing 101 with options. As long as you have that 2-to-1 reward to risk ratio, you'll be successful. So why doesn't everyone do that? Well, here's what happens. You enter into a position, you feel good about it, and let's say, yeah, your target profit is 30%, and it drops 15%. Okay, so you're down 15% of the position, and you're sitting there, and what does the human brain do, right? It gambles. It's like 15%, like, yeah, I'll wait till 17%. Let's just wait a little bit longer, right? And then boom, huge drop happens. Now you're down 20%. And you're like, ooh, now that's too much. Like, I can't sell now. Like, that's too much of a loss. 3 seconds later, boom, now you're down 30%, right? So now you're sitting there thinking, oh boy, right? Now I really can't. Now I just have to hang on to this thing and hope for the best. Next thing you know, you're down 92%, you've got that pit in your stomach. You're just thinking, what have I done, right? And our brains are not wired to lose, right? They're just not. So everyone in here who has done sales or has tried to start a business and has failed, right? Sales, that's part of the game, right? I remember stats, like when I was in Long Island, New York, which to me was the toughest pest control market I've ever sold in. Those people out there were just so mean. They're so mean. It's brutal. I know great people from Long Island, but generally speaking, they are mean people out there. I would knock like 300 doors a day, which is just crazy to look back. It's like, what was I doing? And on a good day, I would sell 7 of them, 8 of them. Of 300 doors knocked, right? It's like, that is a terrible win rate. That is horrifying, right? Yet, if I sold 7 or 8, I'm stoked. So in the stock market, it's the same thing. The only way that you fail in the market is if you mess with the reward to risk ratio. So let's say my friend Brian back here in the back corner, let's say that he decides with his group of buddies, hey, we're going in on DraftKings because it just got approved for all these stuff, or we're going in on Tillery, this weed stock, because it just got approved by FDA, whatever. It's like, cool. If nothing else, Brian and his buddies decided that, cool, we're going to ride this thing all the way up to this point, then you have to understand that if it decreases or if your entry, you lose half of what you're hoping to make, you have to exit. You have to exit the trade. That's the only way it'll ever work. And again, if you do that, even with a 50% win rate, you will still be successful in the market. Now, let's say you get really good, okay? Let's say you get good to where, yeah, you're right 8, 9 times out of 10. And let's say you're able to increase that reward to risk to, let's say, 3 to 1, okay? Where if you are wanting to make 30% on a trade or an investment, you're only willing to lose 10%. Well, now, guys, you don't even need to be right 50% of the time. You can be wrong more than you're right and still make money in the market, right? Like this is truly, if you take nothing else away from today, understanding this principle, every single person here should be able to be profitable in the stock market through options trading, right? Or options investing. And so, again, doing the math on that, if you are right 8, 9 times out of 10 and your reward is 3 times what your risk is on any investment, you're going to be extremely successful. So one of the key components of investing in the market, and this is not just for day trading, this is long-term investing, is you have to understand the simple principle of a support level and a resistance level, okay? So anyone can look at a stock chart, and I mean anyone, and can identify a support and resistance level. Let's use this NVIDIA as an example, okay? This NVIDIA stock chart. And again, this is over 3 years' time. So if we zoom in here, what a resistance is a level that the stock price rose to that it failed to continue to rise past. Okay? So I'm going to say that again. A resistance level on any stock chart in cryptocurrency, Forex, if you're trading options, equity, anything. A resistance level is an area where you have seen price get to and fail to get above. Okay? Pretty simple, right? Anyone could identify like, yep, right there, right? Right there, it failed to get above, right? So then on the flip side, what's a support level? Well, a support level is simply an area that price dropped down to, any stock, right? Any currency, any stock that drops down to an area that then buyers come in and push that up, that's a support level. So same thing here, we see it drop down to this area in the more like recent time frame, drop down to here, and it bounced off of it, right? Meaning buyers, when it got down to that level, buyers were like, all right, we are pushing the stock price up, okay? If you know how to identify a support and resistance level, you know how to have a proper reward to risk ratio, you could literally all stop working today and invest with options full time. Like that's the truth, because that's what I do. Like I don't work, right? I do this because it's super fun, and day trading is like kind of lonely because it's just like you and in your computer, right? I'm in my robe in my house and I'm just like done by 8 o'clock in the morning, and it's like, sweet, now what, you know? I mean, that's the truth. And so these are awesome ways for me to like meet new people, and I just love teaching, and I love being able to help people learn new things. And I love monetizing the skill set. I'm never afraid to say that. The courses, the things we do, I love the fact that I can make money based on the understanding of these things that are kind of more uncommon. But in this regard, right, understanding those 2 simple principles, you can be super successful. So now let's go on a smaller time frame, looking at like a daily chart, right, of a stock price, like Apple, okay? So this was actually sent out to our Uncommon Education community this morning before the stock market opened. One of the cool things we do, we'll tell you, hey, here's the best setups of the day. And you can see that we were looking for a break above this level. Because if we have a resistance level, right, an area where sellers have previously rejected it, and then let's say we see price surpass that level, or it gets past that resistance, what's the logical thing that we can assume? If it fails this, yes. If it fails it, yes. But if it breaks through there, we can assume it's going to continue to go. Yeah, it's going to continue to go up, right? Same thing, if we get to this level and it fails, we can assume it's going to drop, right? And it's going to continue to go down, at least for a little bit. So what we set out is that we were looking for a bounce off of this level, 224, right down here, which is, it was right here. We were looking for a bounce off this level, which was a support level that was really easy to identify, right? We saw buyers were holding it, so we believed that if price dropped back down, that buyers would hold. And then we said if we get above this resistance level, we believe it's going to go up. Now, why wouldn't we assume that it's going to break through this level to the downside and reject this level going down? That's the second thing that if you can learn how to identify, you will be very successful in investing. And that's identifying a trend, okay? Identifying a stock trend. So identifying a stock trend, going back to our previous image, knowing nothing about the stock market, is this Peloton stock chart, do you believe that this is in an uptrend or a downtrend? There's never been a more downtrend trend than Peloton stock. That's not true. Carvana, go look at Carvana stock. That is a downtrend. What a terrible business idea. The cars that like come out of the box, like the one by Lehigh. I can't believe that play. They were almost, well, I think they filed for bankruptcy. Anyway, tangent, but they're a terrible company. So Peloton here, this is in a downtrend, right? So a key component of keeping investing in the market simple is that the trend is your friend, okay? The trend is your friend. If you want to invest in a stock and you believe that it is going to continue to go up, is this a good stock at the current moment to believe that it's going to go up? No, it is in a downtrend, right? Short that thing, enter puts, ride that thing down until it ceases to exist, right? Or until the trend changes, right? But right now the trend is looking bleak, right, on Peloton. It really can't go down much farther. It's down like $4 from 105 3 years ago, so it's looking bleak. But the same thing if it's in an uptrend, right? If a stock is trending up and we are looking for good opportunities, should we be looking to short that stock, or should we be looking for an opportunity to go long on the stock or make money as the stock increases, right? Go long. So in Apple, okay, understanding a trend, and again, there's ways to identify a trend from a technical point, this point. Keep it simple, right? Look at just the direction of the chart over any amount of time. This stock is going down, right? Anyone can identify that. It's again, simplest is always the best. So if we go back to Apple, right, that example that we're going over here, Apple has been in a very nice uptrend as of late, okay? A lot of good things going on at Apple right now. The market, again, is in a good place with the rate cuts that just came out. So the stock market is, for the most part, trending up over the last little bit, okay? So with a trend bias, okay, we're not ever biased, meaning I will go short or long, I don't care, right? But if we are finding a setup where we have a trend going up and we're looking for a good entry point, well, in this scenario, we say, cool, we're trending up, and a trend doesn't always go like this, right? It doesn't just go straight up, it goes like this, right? It goes up, then down, and then up, and then down. It keeps going up higher, right? So it's not just one straight line up. Sometimes it is like Peloton, going down, but it goes up like this, right? Kind of dips back up, comes back down, dips back up, goes back up. So in this example, Apple's in an uptrend, and so we want to find, cool, where's a good area in this uptrend that we believe Apple is going to bounce off of? Or where do we believe if it gets above a resistance level, it's going to continue going? Because again, we can identify very clearly, very easily that it's in an uptrend. So then what we see here, and I want to show the example of what happened, okay? So you see we are looking for a break of this level, the overnight high, which is a pre-market high, a term that you'll learn in the stock market, or a bounce off this level. So let's see, this is from this morning, you guys. This is from this morning. Let's see what ends up happening. Okay? So what ends up happening is this level that was sent out, right, pre-market to our group, super easy to identify. It's the simple things that we just talked about, right? As soon as we get a break above this level, what happens? It continues to go up, right? It truly is as simple as that. While implementing a proper reward to risk ratio where we find a good entry point and we're saying, cool, we want the reward to be bare minimum 2 times what our risk is, you can find success, right? So this was this morning, very, very cool example. Same thing on the NVIDIA setup, right, from this morning, is we knew that NVIDIA over the last couple of days has been trending down. And we can see this, right? You can see it started here a few days ago. It's been trending down, had a slight pop, but then came back down. So this kind of presented a downward bias, right? Or a downtrend bias. So we waited and we looked for a rejection of this area. And once it got to this area with a handful of other confirmations we looked for, we entered puts. We actually had Anna here. She entered this trade this morning with us. Pretty cool. She came up to me. She's like, yeah, I actually took that trade like live as it happened. It's real people, right? It's very cool. So that's on a short-term basis. So what changes on a long-term investment? Okay, so just understanding this simple understanding, what changes when you're trying to invest long-term? Nothing. Nothing changes. It's the exact same thing, right? Literally the exact same thing. Let's go back to the NVIDIA chart over a long period of time. Again, back in 2021, a resistance. We saw resistance back in 2021, an area that NVIDIA had failed to get above, right? It starts trending upwards. We see the stock is trending upwards. And then here in 2022, a year later, it breaks that resistance level, okay, in an uptrend. So what do we believe is going to happen? It's going to continue to go up with all the other good, fundamental analysis, which is the AI stocks, the understanding that, it's this groundbreaking new product. There's all these avenues that it could be this huge multi-billion-dollar company. And sure enough, it goes up, right? What's so funny, guys, on Peloton, it's the exact same thing. So let's say you're back in COVID, you believe, wow, we're coming out of lockdown, Peloton stock, I could see that being a problem, it's not going to do well. There's a support level, right? Back in 2021, we see this area that there was a support level that had formed, meaning buyers pushed it up above that level when it dropped down to it. So with kind of the negative news bias, the negative fundamental analysis, we see it break below that. What do we believe is going to happen? It's going to continue to drop. Sure enough, it drops. So do you see what I mean now, where I never, and anyone who's good in the market, never just invest blindly on a hunch or never just invest based on something that they think is going to happen. You can create that bias or you can create that assumption, but then you implement proper strategies with proper reward to risk management and can find success. And again, with stock options, you can see so much more success than just through traditional investments in shares. Now, do I invest in shares? Absolutely. And that's a passive, I set it and forget it, don't even look at it. But this is where I was able to stop knocking doors, stop being a VP of sales, right? Gave up a $250,000 salary, $80,000 worth of profit sharing on top of that, a company car, and a bunch of other cool perks and benefits. And I was able to say, this is not worth it anymore, right? How crazy is that? Like that's psycho, right? And especially door to door, like to get to that point, I wasn't knocking anymore, I wasn't doing any of that. But that's what's possible, right? And now we have people that I work with and that have been a part of our group who are making a lot of money, right? Doing a lot. So, kind of in closing here, as far as understanding these things, where do you start, right? Like so many people are interested in the stock market, so many people have questions about the stock market, and even understanding this, right, you're going to need a little bit of understanding from, okay, how do I set up a brokerage account properly? What other risk factors should I be aware of? Huge components, okay, that no one thinks about. How much, if you have $10,000 in an account, or if you have $1,000 in an account, how much of that should you risk per trade, right? How much, right? How many trades should you be taking per day, right? How much of the money that you're putting into a trade should you risk, right? Of the percent that you're risking from the account. What's a realistic expectation as far as how much you can make on a day-to-day basis? How should you pull profits? When should you pull profits? When should you start increasing your position size, right? Trading with more money when you get comfortable. When should you do that? How much should you increase it by, right? There's all these questions. And what I always tell people is the only way you know the answer to this is if you learn from someone who is doing it in a full-time or very successful capacity. So I'll be the first to tell you guys, if you go down this road, it took me 3.5 years and $60,000 lost in the market to get to the point where I was profitable. I wasn't even making good money, but I was profitable, right? 3.5 years. That's a long time. I really probably shouldn't have kept trying. But, like $60,000 in 3 years, it's like, well, I'm not very good at this, right? So like, why did I keep going? Well, I don't know, maybe I'm stupid, or maybe I just saw the, other side of it and said, well, if I can get there, that'd be dope. And I'm glad I stuck with it, because I really didn't care. I didn't care if it would take 10 years, 15 years. I was like, I'm young, I have time. Like, if I can figure this out, like, I'll be chilling for the rest of my life. And for the most part, guys, like, I'm chilling for the most part, and it's been fun. So what we have tried to do at Uncommon Education, and what we've tried to do just in general, and what other people out there have done, is built programs to basically expedite that process, right? To get you to the point where you don't have to go through all that. You can learn from someone who knows what they're doing, both short-term and long-term, and learn it in a fraction of the time. I'm literally going to spend 3 minutes on this, max, might even be less, but a few people here have taken part in these and may have questions about it. I just want to show you an idea. There are other groups out there as well that are very successful with these types of setups. But what we do is I help people get from where I was that took me 3.5 years. We help people get there in a 5-week mentorship, basically. Where over 5 weeks, I walk you through all of it, right? A to Z. Cool, here's how you set up your account. Here's the settings you need for the account. Here's how you, set up your screen to look like mine. Here is how you execute the trades. Here is the exact strategies that we use and the confirmations that we use alongside it. Here's how to manage your portfolio the way that we're talking about. I almost compare it to like if you go to a job and you have that like 5-6 week period where it's job training. That's what I do. I basically job train you to become an investor in the stock market, day trader, short-term, long-term. They're really fun. A handful of you in here have actually taken part in these before, and some of you are seeing a lot of success, which is cool. And I think what's great about these mastermind programs is that you get to work with me in a individualized capacity. One thing I wanted to share really quick is my good friend Dave Riedel, okay? Good old Dave, he is 74 years old and retired, okay? Homie could not open his computer without needing assistance. As technically not savvy an individual as I have ever met in my life, right? He just texted me actually, and I didn't even tell him, but he just texted me before I walked in. Just got back from a fishing trip in Minnesota, that's where he lives. This guy, okay, just the definition of old school, worked the same job for 35 years, had a okay retirement, 401k, basically enough to just kind of get by. And now I should show you some of these pictures he sends me. We're good friends. I have a fishing trip planned with him in 2025. I met him just through online. But he's going on Alaskan cruises with his wife. He is, taking pictures with him and his buddies on these fishing trips. He's going golfing in different parts of the country. And he has not touched his 401k in the last year and a half because he has just been living primarily and solely off of his day trading profits, which is pretty wild to me and pretty cool. But I share this and show a guy like Dave because this skill really is a skill. And it's not limited to your personality type. It's not limited to your background. It's not limited to your economic standing. It truly is for everyone. And the number one reason why I would recommend, whether if you're interested with Uncommon Education or someone else, getting a mentor to teach you how to do this properly, is because everyone is different, okay? Now let me explain. Anyone golf in here? Golfers attempt to, successfully, unsuccessfully? So I golf a lot. I've got a weird swing. I kind of pause in the back of my backswing, and it helps me for whatever reason. But if me and Jackson, right, both Googled how to fix my swing, the information that we get, it might be really good for one person, but actually might be counterintuitive for the other, right? And it's the same thing with the stock market. There are so many bad characteristic traits that people who invest in the stock market with that they don't even understand, right? Greed, right? Some of you in here, that might be your issue. You're so greedy that when you hit the point where you know you're supposed to exit the trade for a win, you hold on because you want more. Where the person next to you, their issue might be holding on to a losing trade too long because they hate losing, right? Where another person might have impulse control. They just have to enter a trade, they want to get in, and they kind of are like, unhinged. Where someone else might have kind of the analysis paralysis. They struggle to be confident enough to enter a trade. And so when people trade, and why I believe people getting involved in the stock market fail so much is because they don't get individualized help. They don't get personalized help, right? Some of you in this room, if you went to a strength and conditioning coach, right, your goal might be putting on weight to become stronger and more muscly, and others, your goal would be to lose weight. So would the training program, the food you're eating, right, would that change drastically based on your current situation? 100%. And so that's what we do in our mastermind program over those 5 weeks. I basically help you identify your strengths and weaknesses, right? And luckily, because I've been doing it for so long, I've been through every weakness, and I found ways to overcome them all to the point where I'm still not perfect, but I'm pretty good. And if it's something that you are serious about doing and wanting to learn the right way, I truly don't believe there is a better way to invest in yourself or a better skill to learn in the world. Any education you can get, anything of that nature, you're just not going to get the same output of direct potential money to your bank account as you get from trading. So with that being said, our mastermind program, we actually have one coming up on Monday. I always like doing stuff like this as we lead up to it, to one, let people know what's out there, right? And it's cool to see people who are interested in learning uncommon ways to invest their money. Our mastermind program, we are probably, just being completely honest, middle of the road cost-wise. There's some that are a lot cheaper for sure, and there's some that are exponentially more. We were at SolarCon and RoofingCon. Was it RoofingCon? Yeah, SolarCon and RoofingCon. We had another stock investing group next to us, and their high-end mastermind program was $30,000, which is a lot more than what ours is. I have friends who have different groups that charge $800. It's kind of one of those, you get what you put into it. We only do 4 of these a year, and for me, the reason for that is because I never want this to feel like a full-time job, right? And if I do more than 4 of these mentorships a year, it starts becoming like a job. And that was the whole reason I wanted to day trade in the first place. So it's kind of a selfish reason, but that's why I only do 4 of them a year. Our price for our mastermind program is $7,500. For those who are interested, there's 3 things that you need to be aware of. Number 1, 2025, if this is something you want to look at down the road in the future, we're increasing to $10,000. And the reason for that is we have so much desire for these that I want to keep the group small enough to maintain that intimate relationship with everyone, make it a super world-class experience, whatever. And the only way to do that would be either doing more of these, which I don't want to do, so the next option is increasing. And we want to give you guys the opportunity, if you want to be a part of that. Something else that is very unique for this group that we are willing to do, especially those in the sales world, is we break it up into 4 months of payments, so $1,875 a month for 4 months. The idea is if you go through our program, hopefully within the first couple months, you can at least be making enough to pay for the next couple months of the program. Pretty unique. Again, we don't run your credit or finance it. It's more just hey, you down to pay it over 4 months? Dope, sounds good. That's just how we are. The trading community is awesome. Abundant mentality, a bunch of people just wanting to win together. But the last thing that is very unique and cool about what we're doing right now is this is the last time with our program, at least, that if you want to be involved with, that you can have lifetime access to all future masterminds that we do and our community. So starting next year, again, it's increasing to 10,000. And then if you want to take part in stuff, it's going to be basically a yearly, it's almost like a country club where it's a yearly fee to be a part of it.